The Trump dump that continues this Monday morning with the S&P down minus 120 points, and NASDAQ down 466 points. It was 300 not too long ago, like 30 minutes ago. And the European shares are also down sharply, with the FTSE down minus 4.51%, German DAX down 4.33%. Interest rates in the U.S. are little mixed, with the longer end to the upside, 30-year up about 5 basis points. The 2-year yield is down about 8 basis points. President Trump is defiant about the tariffs, and some countries are talking. We're seeing Japan's Prime Minister will be speaking with the president here today. EU members are chatting away with different ideas, trying to stay united. All this has the U.S. dollar mixed in early trading versus the euro. It's a little changed. The yen, the dollar is lower, and the British pound, the dollar is higher. So I'll go through the technicals that are driving these three major currency pairs to kickstart your new trading day, the new trading week. Buckle up. Let's get going. All right, we'll start by taking a look at the 4-hour chart of the euro versus US dollar, just briefly, because the main level that I'm focused on in the euro is off the hourly chart. You see this area right through here. This area comes between 1.0936, 1.0954. That's going to be a key barometer for traders in the trading today. This level corresponds, as you can see, with a number of different swing lows and swing highs going back here, and then we came up to this area in March, end of February maybe, with the level finding resistance against that level, and then we broke through it. In trading last week, race to the upside and then come back down. We did see the price move below that area in early Asian session trading, but the last move to the downside is trying to hold that level, the low of that level, 1.0936. Now, if I go to the hourly chart, also in play off the hourly chart is this blue line. This blue line represents the 100-hour moving average. In the first hour of trading, we did move below that level briefly, but that last two tries down here, including the most recent bar, is finding some support against that rising 100-hour moving average. Currently comes right at the level, or right near the level of the low of that swing area seen off the 4-hour chart. That's still this yellow area right through here. So this is going to be key support in trading here today. If the price can hold above that level, then the upside remains in play, or in control, I should say. The buyers remain in control. If we break below it, then they start to lose more of their strength. Another level up here we need to get through is around the 110 level. So keep that level in mind. Admittedly, we did move above it, just like we moved below it here, but then move back down below it. So, but just keep that 110 level as a level in mind, that if we do get above it, we should see further upside momentum. So the battle is on between here and here. And here. So we'll see how that plays out in the euro versus US dollar as the morning goes on. Let's take a look at the dollar versus yen. And I outlined this area right through here on Friday's trade as a level of importance for this currency pair. Again, we're looking at the 4-hour chart. This level corresponded with different highs through here. We moved above it through here and then came right back down, fell below the level, tried to use the level as a resistance right here before breaking to the upside. And that was all she wrote until last week when the price came down to that level, found support buyers, and bounced off of that level. So held nicely there again in the dollar versus yen, and we're seeing the bounce up to the upside. We have seen volatile up and down price action. Let me move this over here to show where the the high on Friday went up to this other swing area through here. You can see the importance of that area through there as well, from different highs and lows through here, and then came down to it right here, found support, broke through that level, and then came back up to it. So this level is going to be a key level going forward as well, between 147.28 and 33, somewhere around there, maybe a little bit lower than that, 20 to 38. On the top side, get above that level, it's going to be more bullish for the dollar versus yen. Stay below it, and the sellers probably still more in control. Of course, this low right here is also a level of importance, and you can see that in the current 4-hour bar, the price has come up to that level and found willing sellers ahead of that, or near that, I should say. We just moved a little bit above it. 146.53 is where that level comes in play. Let's take a look at the hourly chart to see what's in play off of the hourly chart. And if I move back here, the high price that we saw on Friday, again approaching that swing area through here did, was getting closer to the 100-hour moving average, but it's still far away off. This is that swing area we were talking about on the top side off of the 4-hour chart up to it's 147.20 to 147.33. The 100-bar moving average moving closer to that, and it's on a steep decline here through here. So it'll catch up with this area right through here, increasing that level's importance going forward. So be aware of that. Here's our swing low going back to the month of March. And you can see how the price moved just above that level. Move above that 146.50. 3 area and stay above that level would be positive for the dollar versus yen. Keep that level in mind for this pair. Finally, let's take a look at the sterling versus US dollar. And we'll look at the 4-hour chart and then look at the hourly chart for this. So we are breaking up below the 200-bar moving average on the 4-hour chart. We did hold it on Friday's trade, bounced off of that level, which was nice. It also happened to correspond roughly with this nice floor here. This floor was defined by a number of different swing lows, not only there, but here and here as well. And so that low comes in at 128.60 to 128.78. Keep that level in mind. Also, the 200-bar moving average on the 4-hour chart, as mentioned. On Friday, we bounced off of that level, and in trading here today, we tried to move higher, and then we've broken below it over the last 4 hours of trading. And where we head down to the next key target, the 200-day moving average at 128.12. Also, the 38.2% retracement is in play of this move to the upside. So the sellers are trying to take control below this key floor here, below the 200-bar moving average on the 4-hour chart. Price is going to need to get above this level to increase the bullish bias. Alternatively, break below the 200-day moving average, is just ticks away at this, and adds more control to the sellers, with the 38.2% retracement being the next key level to get to and through on the downside. Taking a look at the hourly chart, I promised it would. The fall below the 200-hour moving average on Friday's trade ignited the move to the downside. The rise back higher here did find early sellers against that 200-hour moving average. We're going to need to get above that level on the top side and the 100-hour moving average. If this old floor right through here is able to be broken, that old floor goes back in time right through here. So we got to get above this level. To get above these levels right through here, we got to get below the next level. Let's get to below 238.2% tracing on the downside. So there you have it. Look at the 3 major currency pairs and a little chatter about what's going on. My name is Greg Mikulowski. Good fortune through trading. Bye-bye now.